So we've got a panel up next, so if I could invite the panel to come up onto the stage. It's going to be moderated by Simon Gray, who is the Head of Business Development and Marketing at BVI Finance. Simon's got 25 years experience in both public and private sectors, including international finance houses such as Barings and Barclays Wealth. He's a prolific writer, published author, and public speaker. He holds a law degree and an MBA, as well as a raft of governance qualifications, which are far too long to list. His real passion is travelling, and he and his wife have taken their kids all over the world. So he actually tells me he should really have had a career in as a travel advisor or travel agent rather than what he's ended up doing. But luckily for us, he's a specialist in this area. So if I could invite him up on, we're going to hear about how to maximise growth and minimise risk. Just what we wanted to hear about. Thank you, Simon.
Well, Sarah, thank you very much for that very kind introduction. Yes, indeed, I should have been a travel agent, but somehow I ended up doing law first and then business development. I'm delighted to invite my panelists here, but I would like to point out that a very important individual, Agnes Gito, her name should be up there. So Agnes, it's fairly obvious who is Agnes on the panel. But my apologies for that oversight. Right. But before I introduce these most impressive colleagues of mine, the theme today is very much about maximizing growth and minimizing risk. I think you all know the expression, jam today. Well, that's desirable, but jam today must never incubate or mean risk tomorrow. So lawyers are by nature cautious, which is a very good thing to be, but so are many professionals, and it's vital that growth can be maximized, and a great place for it at the moment is the exponential increase economically that we're seeing across the whole of Africa, but never at the expense of risk. So risk is always important to hedge against and to minimize. When I go through the most impressive biographies of my colleagues, it is a little bit humbling, but I'll begin with Agnes. Agnes is the managing partner of GBS Africa, a very experienced international trade and investment advisor, and currently the managing partner of GBS Africa, which is an advisory services firm. And she focuses on dealing with the operational challenges associated with sub-Saharan Africa, providing very important strategic advice on political and economic risk, market entry strategies, and stakeholder management. She's also a dedicated supporter of the sector dealing with the alleviation of poverty. And she's a trustee of the microfinance charity called Five Talents UK, and a board member of the Intra-Commonwealth SME Association and Eastern Africa Association. She's also a member of the International Arbitration Conference of East Africa, where she is a committee member. And to ensure that we have equilibrium across Africa, I mean, we've also got Stanley Oswidi, who is the CEO of Africa Investment Gateway from Lagos in Nigeria. Stanley is the co-founder and the current CEO of Africa Investment Gateway. He also sits on the board of a number of other vital companies such as Nigeria Investment Gateway and Green Renewable Energy Group and the Startup City Hub. And Thomas Dugdale is a lawyer. He's senior counsel at Harness, which is a leading international law firm. He specializes in a host of products, including BVI Islands and Cayman Islands funds, particularly with hedge funds and private equity. He's also had a significant experience in Hong Kong. Matthew Gilbert is a senior partner at Maples Group, another very prominent international law firm, and both Harness and Maples are leading firms within the British Virgin Islands. Matthew is a specialist in transactional business, and he specializes in listing BVI companies on a number of international stock exchanges, including the LSE, AIM, NASDAQ, and the Toronto Stock Exchange. He's also a prolific writer and speaker, and has contributed to a number of industry journals over the years. Just before I ask the number of questions, I will be seeking questions from the audience, and it's very important that we do try and hear from you, because you're the most important component of today's proceedings. But I did want to draw your attention to a very interesting report that was produced in December of 2018, and this was produced by Dr. Judith Tyson, who is an academic working for the Overseas Development Institute, and it's entitled International Financial Centers and Development Finance, so it's highly topical in terms of the African continent. But what she points out significantly is IFC's galvanized 1.6 trillion of additional finance to developing countries in the 7 years between 07 and 14, also helping boost developing countries' GDP by $400 billion and tax revenues by US 100 billion. And I do commend you to look at that report. It's very interesting, it's objective, it's independently produced, and it's mandated by the Overseas Development Institute, which I think speaks for itself. But in terms of the first question, I'd like to perhaps start with you, Agnes. What do you think are the unique investment opportunities in Africa in comparison with the developed world, and what mechanisms are in place to support these?
Thank you, Simon, and thank you everyone for coming to listen to us. It's always exciting for me when I have an opportunity to talk about the continent. I think decades and decades ago, whenever we talked about the continent, it was always about war, starvation, or all the terrible things that happen in the continent. It's always a great opportunity to share a good story about Africa. So what are the unique opportunities? I think for me, the unique opportunities lies in Africa's recovery post-COVID. And the sectors which I think investors would be interested in would be sectors that are aimed at addressing the society needs. Those include recovery in the healthcare sector. The previous speaker talked about the financing gap in the region, and one of the areas that has the huge gap, apart from infrastructure, is healthcare. We were lucky, the fact that we were not hit by COVID like many developed economies, but according to the Economic Commission for Africa, Africa requires at least $100 billion in health infrastructure. And where will that come from? We've seen incredible innovation around healthcare technology. And in the last 6 months, we've seen venture capital, private equity, and financing institutions who are funding tech startups that are focused in the healthcare sector. Other areas that are unique is fintech. I'm from Kenya, and when you hear about Kenya, apart from the runners who dominate the marathon, you hear about M-Pesa, the mobile technology that was founded in the country about a decade ago. Quite a trendsetter. So there are huge opportunities in the fintech area. So again, there are a lot of startup, innovative companies, innovative ideas, and those really need financing. And government alone will not be able to finance these projects. So it's a great opportunity for private sector. Well, infrastructure has always been unique. Africa Development Bank estimates about another 120 billion to finance infrastructure. You're aware that the continent has signed an Africa trade agreement incorporating 54 countries, and today we have about 38 countries that have ratified the agreement. So to be able to take advantage of that agreement, I think one of the barriers to trade is access to trade finance, particularly amongst the SMEs. So again, another opportunity for private sector to come in and invest in SMEs so that they can scale into the African market. So there are a lot of opportunities. Are they unique to the continent? I'm not too sure, but my view lies, how do we harness local capacity to build the continent post-COVID and to be able to ensure economies that are growing, but also ensure quality of lives of our people.
Thank you very much. Stanley, I spoke of equilibrium. It's Agnes, obviously Kenya, you're very much from Nigeria. What are your sort of thoughts and comments on?
Fantastic. Thank you for the opportunity to share some of the stuff we're working on. And just to buttress of what some of the stuff Agnes has mentioned already, vast opportunity, 1.4 billion people in Africa or more. Vast opportunity in healthcare, vast opportunity in agriculture, At the moment, we're working on putting one of the largest hospitals in Africa on a 50-acre land just outside Lagos. You can imagine the infrastructure opportunities in that. You can imagine the employment opportunities in that. We're working on bringing electric vehicles into the commercial sectors in Nigeria. You can imagine the opportunities in that, down to infrastructures as well. So bringing electric vehicles, the infrastructures are not there. So the investment opportunities in infrastructures, there's a lot. We're currently working on afforestation. So in about 4 countries, we're going to be planting about 10,000 hectares in each of these countries of afforestation. You can imagine the opportunities for investment, tourism, also for investors to come in as well to help us in terms of those investment opportunities. Yes, mining sector controversial, but we have the minerals everywhere that you can find them. I had a call the other day to say that a colleague of mine visited a site, and he says, my shoes are damaged. I said, from what? He said, barites. They were just coming out oozing from the floor. And that damages his shoes straight away. This is something that we're still importing to build our roads, and it's oozing from our floor. So there's opportunities there for people that are very interested to come into Africa to look at those opportunities. Yeah.
No, thank you very much. And I'd like to just dwell on a similar theme, but in terms of the African continental free trade area, I believe that's worth approximately 3.5 billion. In what ways do you see that working in reality to facilitate trade across the continent and enabling businesses to scale up more easily? Agnes, any thoughts from your side?
Sure, thank you very much, Simon. You know, there is a parable, an African parable that says, when the sound of the drums is really good, the drummers participate in the dance. So I think the AFCFTA, for the first time, Africans coming together. I think the sound and the vision that our political leaders have seen of an integrated continent, a continent that is able to trade across with each other, I think has attracted many Africans. What are the opportunities? Of course, opportunities for scaling. I mean, if you're orange seller, say, in the streets of Nairobi, imagine the market accessing 1.5 billion people. And at the moment, may I say, it's just a vision. There is a lot of work that needs to be done, the implementation, and they say the devil is in the detail. To date, about 41 countries have ratified the AFCFTA. It started operation in January this year. We do not have the data yet as to how much trade has been recorded under ACFTA, but there are the government and the African Union have provided some legal tools to facilitate this trade. And one of those is they have a protocol in trading goods. They also have a protocol in trade, on trade in services, and a protocol on dispute settlement. So I think that gives people engaged in cross-border trade the confidence that there are already legal instruments to support them be able to trade. But look, the vision, apparently, if we are able to integrate in the continent by 2050, the continent will earn about $540 billion just from export. It will create about I think that will create 30 million jobs in the continent. Remember, one of the biggest challenges for the continent is unemployment, high rates of unemployment, particularly amongst the youth. So it's a great vision. However, it will take everybody. It will take the private sector to participate. It will take a lot of political will for people to be able to open their borders. And as I said, it's just early days, and it's in the data. We hopefully by the end of the year we'll have some data to see how much trade has been recorded under ACFTA. One of the challenges that I talked about it as an opportunity is the lack of trade finance. I mean, 80% of African businesses are SMEs. They struggle to access finance. And for you to be able to trade, it doesn't matter whether you're from Africa or anywhere, you need to be able to access finance. So if ACFTA is going to succeed, there has to be the political will to implement it, but it also has to have the private sector participation.
Okay. Well, thank you very much. And Stanley, if I could modify the question very slightly, what are your senses from the international trading partners in terms of, are they looking at this with trepidation that they're going to lose their own opportunities, perhaps a little selfishly? Any thoughts?
Absolutely. Where there's an opportunity as such as this for Africans, somebody has to lose out somewhere. We're aware of that. Let's just be open about it. Somebody has to lose out somewhere. But when I do business with our partners, I say to them, listen, whatever way we do business, it needs to be beneficial for the African people. Or else there's not going to be sustainable in the long run. Yes, trades in China will slow down once we get this right. Trade with America will slow down. Trade with the UK will slow down. But there are other opportunities that will provide for these countries as well. If we're really serious about tackling the environmental impact that all of this trade in importations are posing for us, then we need to make sure this system works into trading within countries. There's no point flying, for example, cashew nut to Malaysia to get it processed to bring back to Africa to sell. And we're trying to tackle pollution. So it's very beneficial for Africa to sort this out. It's new. It's just started in January. It will take time. I think 3 years from now, we should look at it and say, how is this working? I think 12 months from now, it's a bit too early to see if there's any impact so far.
Sure. Well, of course, the European Union began as an iron and steel coal trading operation in 1957, and I think in spite of our recent divorce, sadly, I think everyone accepts it's actually been very successful, and long may it continue. So I look forward to doing this again 3 years, 5 years, 10 years, and seeing how this develops. I'm sure you'll defy the odds and be very successful. I'd like now to sort of switch things a little, perhaps somewhat selfishly, and talk about how can international financial centres, such as the British Virgin Islands, assist to maximise the benefits of the African continental free trade area. Matthew, perhaps I could ask any thoughts you might have on that.
Yeah, absolutely. I think what we've seen with other free trade areas, trading blocks, is that they encourage cross-border investment from region to region, and we'll touch on this maybe in some more detail a bit later. But one of the difficulties in that sort of global trade is that people come from different cultures, they come from different backgrounds, different legal systems, different ways of doing things. And investment platforms that all of the international finance centres provide provide a level playing field, a neutral vehicle where co-investors, trading partners, joint venture partners can invest and trade and structure through vehicles in these neutral jurisdictions. And I don't think that can be underestimated in terms of the ability to attract investment, attract leverage on a cross-border basis from the lenders, the investors, the global institutions, the development institutions, export import lenders. It's hugely important. I think that the fact about 30% of international investment does flow through these jurisdictions, and these structures in these jurisdictions speak for itself. And I think any free trade region will find that the more mediation, the more common ground that could be found, within the structures that are used to contract will only help with growth.
Yeah. All right, thank you. Thomas, anything to add from your side?
Thank you. Thank you, Matthew. I think just to bring it more specifically into BVI and jurisdictions like the BVI, just to sort of flow on from what Matthew has said, the BVI is, as Matthew says, has a sort of a good, robust, level international playing field, and that's based very much on the fact that it's British Overseas Territory with English law as its sort of foundation, and also the English courts are all sort of based on the English model, and indeed the Privy Council in London is the highest court in the land for a jurisdiction like the BVI. So all these things give a jurisdiction like the BVI credibility and a long-standing good reputation for investors and they know and they're confident that contracts will be enforceable and that sort of investor rights will be protected.
Good, thank you. And my understanding is the BVI introduced its arbitration centre about 3 years ago, so that's another element of the process of seeking resolution, perhaps privately and more cost effectively. Is that correct?
Yes, absolutely. I mean, the new arbitration regime in the BVI is relatively young, and hasn't been helped by COVID recently, but it's very much operational, and the idea is absolutely to provide an alternative to sort of the existing international arbitration for businesses that touch BVI.
All right, thank you. I'd like to now turn to Agnes. What are the challenges you find in terms of scaling businesses specifically in Africa this year and perhaps for 2022?
I could talk about lack of finance until the cows come home. You know, access to finance is one
We
of
have
the big...
about 15 minutes.
Yeah, so finance, and also credible partners for the continent. As we look at ESG values, I see a lot of businesses use that as just a tick box. I think the continent need partners who are in the continent for the long run. But, I mean, jokes aside, our AFDB estimates 120 billion just for the SMEs. We are working in partnership with the Africa Trade Policy to just try and investigate some of the barriers in formal sector, which is a huge market in the continent, how they can scale and what are some of the barriers they face when seeking trade finance. So looking from the demand side. But lack of finance is one of the biggest challenges for businesses to scale. I think we've been lucky, particularly in the last 1 year. COVID has been a blessing to any tech-based companies, so logistic firms, and I talked about healthcare firms or fintech companies have really benefited from venture capital, from Pararikiti. And so if we can get more UK or international investors who have confidence in our market as markets start to open, economies start to open up, I think that will help businesses scale up. And again, the opportunities. A business in Nairobi will probably need a partner who can help them expand to the Eastern African region or to the Western African region. And I think as the UK looks to build new partners post-COVID. Kenya and the United Kingdom have just signed an economic partnership, and they're doing the same with a lot of other African countries. I think post-Brexit, there is a lot of opportunities for UK businesses to come to the market and to help us scale and take advantage of the Africa Free Trade Agreement. And also the lack of infrastructure. I'm sure you've had that, the infrastructure challenges that continent face, the financing deficit in that sector, the unpredictability of our laws and contracts. I mean, we need to make sure that contracts can be honored, that you can take a contract to the bank and there's going to be predictability. And one of the areas, and I think this is just a vision, I don't know whether it will ever happen, it's just harmonizing laws across the continent. So an investor in Cape Town knows and understands that there is an environment in the north part of Africa that they can understand. So opportunities for scaling, a lot of challenges, but it's in challenges that you find value.
Excellent. Stanley, from your perspective, Africa Investment Gateway, you're from West Africa, but your company covers the whole of the continent. Anything to add from a scaling perspective?
Yeah, well, the opportunities are there in Africa to scale businesses, but one of the most important thing that we see with businesses that are lacking is the knowledge. So there's no amount of investment you bring in. If there's no knowledge to get the work done, then you're just pouring money in the black hole. Yeah? So what we're asking people to do is bring the knowledge. We want to partner with British organizations, European organizations. Let's get the knowledge into the areas that are needed in agriculture, even fintech. Africans are well-read, most of them 2-3 degrees, PhDs. But the knowledge to actually get a project from start to finish, especially when those projects have been done in other countries before. Let's get this knowledge in. Investment is important, yes, but the knowledge will help us scale these businesses, especially with organizations that has done it before. I'll give you an example with Kenya, M-Pesa. M-Pesa has done this. You can buy an apple in Kenya with your phone. You pay with your phone. We're trying to replicate this in Nigeria. Why would we be suffering for 5 years to learn how it works? Go to Kenya and learn what they've done. Come back and implement. So knowledge transfer is a very crucial element in scaling businesses in Africa, and that's what we're looking for.
No, that was very well put. Thank you. I'd just like now to ask, how can businesses and investors mitigate risk through international financial centres such as the BVI? Matthew, any thoughts from your side?
Yeah, absolutely. I mean, we've just heard, I think, a number of the challenges, and those challenges obviously prevent risks, which can potentially certainly slow or halt growth and investment. And as Agnes says, the need to attract long-term, credible finance and investment partners is absolutely key. And the unpredictability of outcomes, on the ground with investments that are made, by partners, outside of the region, are difficult for external investors. So when we look at FDI into Africa, or investment between African nations, then that need to mitigate the risks that we can control, is essential. I mean, power supply risks, infrastructure issues, are hard for any one business to do much about. But the devil being in the detail of the corporate structuring, business does have a world of choice when it comes to the way a business of any size is structured, and the use of a jurisdiction that comes from credible English common law background, such that privity of contract will be respected, through the use of judicial systems with independent judges who will make sure that a contract does what it says on the tin. The use of investment agreements, shareholders agreements that are predicated on English law, means that what the parties have agreed will be respected in court. So there will be that honouring of the contracts, which mustn't be underinvested. Underestimated. For an investment to go into an investment, they need to know what their return is, and that it's going to be the predictable outcome that they expect, and the risk can be mitigated, through the use of structures that the parties can control, and they can leverage off of the basic the basic selection of the choice of law, the choice of jurisdiction, whether they want to go to court if there's an issue, or if they want to go to a private arbitration. These are all options. I think there are steps that can be taken, by any business looking to scale up or to start doing, wider investment, to, make the, trading and investment into that vehicle, more straightforward, more attractive, and in the long run,
Sure.
That does pay dividends.
No, thank you. That was extremely well put. But I think the key thing is certainty, legal certainty, and that gives a huge amount of comfort. And intriguingly, what we do find in the BVI and in other overseas territories is many investors from jurisdictions across the world who are not instinctively familiar with the common law system embrace it very quickly because of its flexibility. Thomas, you've got a lot of experience in Cayman as well as the BVI, another good jurisdiction. Any additional comments you'd like to make based on your lots of experience?
Thank you. One follow-up comment to what Matthew's just said is that lenders to international businesses will also look to closely at the jurisdiction of the company or the entity that they are lending to, and so that's another important consideration for a business when it chooses domicile and jurisdiction, and the protections for lenders in a jurisdiction like the BVI and Cayman, as you say, are very good, very robust. They sort of light but effective, as it were, and lenders are very comfortable lending money to BVI businesses.
All right, thank you. I'm conscious of we're slightly hogging the floor with our questions, but would any of you like to ask a question of my colleagues? Gentleman on the right.
Hi, thank you. Yes, very interesting discussion. Thank you very much. Very interested in maximising growth and minimising risk. I am myself an arbitration lawyer, and I was interested to hear a couple of comments on arbitration from the panel, and I thought I'd just get some follow-up views on that. I've been based in London for most of my career, and of course we see a good flow of Africa-related disputes here coming to London arbitration under English law. We're fortunate for the inheritance that's caused that work to come here, and I've dealt with disputes in relation to Nigeria, Kenya, Tanzania, Zimbabwe, and others. But I can't help think that I'm not the future of dispute resolution for Africa-related disputes. Now, even within Europe, the European Union has taken 50-odd years to try and persuade people that national courts are one and the same. But still, I think you would have investors from Italy or France, not the UK anymore, question whether they did want to end up in other EU courts in Greece or in Bulgaria or anywhere else. So I think national courts are inherently problematic for cross-border investment. I would like to hear just few more thoughts from the panel on their views of the future of international arbitration within Africa. Where is Africa? Where are Pan-African disputants? And obviously, we're looking here about maximising growth, but disputes do arise, and we have to be realistic about that. And resolving them in a timely and efficient way is very important. And much as I'm happy to keep seeing that work coming to London, I'd also like to travel to other places too.
Right.
So what does the panel think about the role of international arbitration in resolving Pan-African disputes? Where do you think parties within Africa are looking now and will look in the future to resolve those disputes? And if I may, another question, which is about the attitude towards investment protection between jurisdictions in Africa, recognizing that, again, within the European Union, the Commission itself is not very happy with treaty claims being brought in relation to investors within the EU. Now, Africa is on the path towards maybe an investment protocol there. But what's the sense of where arbitration is at the moment within Africa, in particular for intra-Africa investment?
Well, thank you. That was a very good question. Hopefully there's time for each of my colleagues to give a short response, but perhaps start with you, Matthew.
I think from my perspective, it's about the choice of the parties, and London is a centre where traditionally the world has done business, and people have flown in, and it's been open and welcome and straightforward for business people to sort of have their disputes aired in private or in public in London. There are other options, and when you've got contracting parties, then the aim I think is probably to avoid any any sort of partisan approach to where the arbitration will be held. I mean, there are I think there are more options than London. Agnes, I think probably has more experience in me in terms of where the kind of current where the current forums are that are more appealing. But certainly, Paris, Singapore, BVI, there are sort of various levelers, and I can see why parties within Africa might want to look to one or another. I'm interested in what you say, that London may not be the future. I mean, certainly from what we see, Tom and I, and in fact all four of us are based in London doing purely international cross-border work, because this is where the world does business, and dealing with those disputes is a natural extension to that. but arbitration isn't my area, whereas I think Agnes probably does have more useful...
Nicely introduced to Agnes. Over to you.
Thank you very much. You're right. London will still have a role to play in international arbitration. However, there's been some great initiatives, particularly from where I come from, the East Africa. 10 years ago, we started the East Africa International Arbitration Forum, and this is where we build capacity amongst the legal practitioners, arbitrators, government officers on the importance of international arbitration. And I tell you, not just in East Africa, across the region, I think governments and all stakeholders realize the importance of international arbitration and capacity. So it gives the investor the confidence, as you said, whenever there's a dispute, you want to have the confidence that it's going to be resolved efficiently and in a fair way. There are some great centers coming out of the continent. Kigali Arbitration Center is one of them. Just in the last 5 years, they have over 100 cases to date. Mauritius, the Mauritius Center, and Nairobi International Arbitration Center. So there is a lot of initiative, and there is that sort of call on African cases to be heard in the continent. Apart from what it does for the investors, we know very well that arbitration in itself provides opportunity for growth and prosperity. The economic activity around arbitration, hotel, the tourism sector, so many other sectors can benefit from arbitration. So yes, there is a lot of work, and we've seen collaboration, and again, it's great to see that under the African Free Trade Agreement, there is that provision for dispute resolution. So it's the understanding that, yes, you need international arbitration, and I know London, and I think what we do and what we need to do is collaborate. Apart from saying, we can't go to London, I think collaboration between centers, so Nairobi centers, seeking support from the LCIA and other centers. And I think also the ICC realizes that the future of Paris and international market for Africa cases, I think it's only fair for African cases to be heard in the continent. But there is a lot of work to do. The infrastructure, which involves training and development, and I must say, I don't know whether Andrew is here, we've worked very closely with international law firms to support African law firms to build international arbitration capacity.
Thank you very much. I'm so sorry, but time has conspired against us. That was a great question, but forgive me, Thomas and Stanley, but we are going to be available afterwards, so if there's a follow-up to that or any other questions, do visit our BVI Finance booth. And let me conclude by thanking my colleagues for their very informative and very incisive arguments and reasoning. But thank you very much to the AFSIC authorities as well for allowing us this platform. Thank you.
Thank you.